the tremendous difficulty is trying to talk about where we are right now, where we were, and where does it look like we're going? Are we really facing a bull market? A lot of people think we're going to get back to January, which we just discussed isn't the greatest period of time. But is it really going to get better? History tells us that at the end of these markets, we actually know what kind of things to look for to know if it is in fact the end. For instance, in January and December of 2019 and 20, we were actually hitting in multiples, meaning price earnings multiples, 28 times earnings. Pretty high. Very difficult to have a bull market starting at the high end of a multiple. Most bull markets begin from almost single-digit multiples. In 2006, 2007, 2008, when the market finally hit its bottom, we were at a multiple of 12 times earnings, a PE of 12. Not the greatest, but not bad. We're at 30 today. The only times we've been at 30 have been times that are just prior to very long-term problems in the market. And I think what's difficult to understand is 30 times earnings means 30 years at that earnings rate to get your money back. That is a heck of a long time. It's a little bit easier if it's 7 times because, well, what the heck, 7 years is better than 30. So we know that each one of these major drops in the market, each one of these major bearish turns in the market start around 30. So that kind of tells you something you want to look at. That's where we are. Let me add to that just for a second. Usually when the public is at about 38%, meaning they've taken 38% of their financial resources and put them into the stock market, that is about as far as you can go. 38% seems to be the top every single time. We don't have an exception to this. In 2008, 2007, we were at 38 times, meaning the public was totally involved. And the problem with that is, who do they sell to? They're the buyers. Now they have to find someone to sell and make a profit. So you suddenly reach a point where 38 times, then 30 PEs are beginning to become the big problem in the market. That is the basic problem that this market faces. It is too expensive. And when things get too expensive, there's only one direction they can go in. Now, not to be silly, because I don't want to be silly about this, but one of the things you get when you get to the top of the market is you get a lot of crazy things going on in the market. This has gotten to the point where we have enough things out there, meaning SPACs and cryptocurrencies and useless pieces of paper. No matter how good anyone tries to sell you on them, they are useless. Most of these things begin to exist when you get to the numbers that we're talking about. Now, when a market gets this silly, which it certainly is, then you want to say that I think it's time to step away. One of my problems is that it sounds, when I'm talking about it, like it's doom and gloom. I am not talking doom and gloom. I am simply saying, I'll use a name, Ray Dalio. Very important, very
famous
big,
hedge fund manager, very
famous
successful.
And certainly a billionaire. One of his most classic thing that he says from month to month, week to week is, cash is trash.
Right.
Now we've talked about this before, so it's not new. But for all of those people who are listening, and you've got 2 months of savings if you lose your job and then you have nothing, cash is not trash.
Right.
Ray Dalio can talk like that. Jamie Dimon can walk around and say, don't buy treasuries. That is something he says because interest rates are going higher. Who is the largest buyer of treasuries in the world right now? JP Morgan Chase.
JP Morgan Chase.
That's his bank. So the point is that having money going into this next period of time is very valuable.
Right, having cash. Right.
Having cash.
Liquidity.
Because liquidity means you can buy something cheaper. It means that it really does have value. And that's what I think people have to look at. Let me put treasuries on an entirely different level than we're talking about them. Let's just say that the United States is sitting with $30 trillion worth of debt. But as a percent of debt, yeah, that's pretty high. I don't like
it
that.
Is.
None of us like
no
that.
Question.
But let me make a point about something else. We got $30 trillion worth of debt. Do you know that the Federal Reserve comes out every year and tells us how much value we, as private citizens, we are worth? And you know what we're worth this year? $130 trillion. That is an incredible number. Now, 20% of that, 20% is debt. That's that 30 trillion. Now imagine all of those people who are listening, if your mortgage was 20% or less, you would say, terrific.
Yeah, right, exactly.
Terrific.
Yeah.
So we as a country, when you look at us, that's why we're considered the finest and the reserve currency of the world and the sovereign debt of the world, because we have so many assets backing that 30 trillion. Should we go to 40? No, I don't think we should go to 40. But even if we went to 40, would it really matter in terms of the asset? Treasuries are cheap. They are very cheap. The reason why I say they're cheap is the average 10-year treasury in this world of sophisticated countries that are in good shape, that are considered qualified to sell sovereign debt, the average rate on a 10-year is 0.60 basis point, 0.60. Our 10-year treasury is 155 today. Let me tell you why that's cheap. Because forget the 155 and forget the 0.60, which is the rest of the world. So 155 is a good return. But you shouldn't buy treasuries because of the 155. That's a good idea. But if the treasuries simply go back to where they were 1 year ago, that 155 would be 1, or it would be 0.55. And that's a 10, 12% return.
Right.
Plus the 155. But more important, we were talking about cash. No one says you have to buy 10-year treasuries. The idea is that your cash can go into a treasury bill. The fact that you get nothing in return other than the safety of your money isn't the issue. The issue is that you have money. We are now really faced with a serious economic problem. And that economic problem can't be solved with I think that's really important to understand. We don't have for this problem. And so I think we have to deal with it, and we have to deal with it with a sense of reality. And there's a lot of smart people out there that, believe me, most corporate insiders are selling their own stock. Most people who say cash is trash have plenty of cash.